Welcome to Crypto Rosetta. My name is Savage. Today we're going to be looking at CAKE. We do have a higher time frame video that's coming out today, so make sure that you check that out for some context within the waves that we're going to be discussing today. Okay, so let's get into the price action and see what's going on. Okay, so the primary way that I'm looking at this is treating this as a previous triangle that we had up here, where this is A, B, C, D, and E, where we've actually had an E wave triangle within this. Now, what I'm looking for within these internals is that potentially this is a wave 1, 2, all of this becomes a third wave. We're looking for a fourth and a fifth. So an interesting zone that I'm keeping an eye on here is for as long as we remain below this $2.06 area, we could actually see some rejection. Now, we do have this target box area above us between this $1.94 to this $1.84 area. Now within this, what I'm looking out for is the fact that we do have some daily naked points of control sitting here towards this $1.84 to this $1.87. So these would be daily ones. Then we have some weekly ones which are also sitting within this range of this 187 to this 191 area. So I'm looking at this high here and also keeping track on that towards this $1.88. A three-wave move up into this zone where we see something like this play out could actually tie in with this idea of a fourth wave, and then we have an additional fifth wave to the downside where we could see a breakdown towards this $1.42 to this $1.29. Now we could also start arguing that we have potential for a breakout here based on the structure that we do see here. There is also the potential that within this count we could argue that possibly this fourth and fifth has completed, something like this. Now it's not my favorite way of looking at this move, but technically speaking, it is possible. So if this is the case, we could be looking for a break to the upside. One thing we also need to be mindful of here is that there is a more bearish way of counting this, where instead of treating this as a triangle back up here, we actually just treat this as a corrective wave here into where this A wave is. And then what we'd be looking for would actually be something more along the lines of this, where we'd be treating this as an additional 1, 2, 1, 2, looking for a bigger third wave to the downside, and then looking for this additional fourth and a fifth. Now within this count, if we still haven't completed the internal count of this blue count, what we could see is an additional move down here. The key difference, well, the key thing here is as long as we only form three wave moves to the upside, failing to break above this $2.32 region, we could see continuation in additional fourth and a fifth here, which could look to push us down towards primarily this $1.26 to this $1.11, and then possibly even having an additional fourth and a fifth here, which could see us actually have another fourth wave up towards this $2.38 and an additional fifth wave, looking to target out this lower range here of this $1 to this 78-cent region. So this would tie in with actually coming down here into this 3618 region towards this $1. So this is going to be a key psychological level. If we do continue to break down here, I would be keeping an eye on this zone as a possible area. Now on the flip side here, if we want to argue that this move is not in a corrective structure and we've actually looked to complete, what we could be looking at here, if I come back down into the 4-hourly, what we could see here is that within this structure, what we could be looking at is that we have this as a 1, 2, 3, 4, and a 5. So as long as we actually hold this zone of this $1.74 to this $1.67, we could actually be looking for the potential of an additional fifth wave to the upside, target being towards this $1.89 to this $1.84. So this would be tying in with the idea that this is 1, 2, all of this has become third wave, we're looking for a fourth and a fifth. However, if we start to lose this $1.67, it becomes less likely that we are going to see this additional fifth wave to the upside, though invalidation really is only much lower down here at this 156. But once we start to break down too deep here, it becomes less probable that this is still a fourth and a fifth. Now, if this is the case, what we could potentially then argue is that possibly this move could have completed into here. Now, the reason I don't like looking at it like this is because we don't have anything comparable to this wave 2 yet. This would be comparable at the moment if we do push up one more time for a fifth wave. Now, if we are completed this as rather just a corrective structure, what we could see is a move up here as A, get a move down for a B, and then C, a move up for a C. So this could actually be either A, B, C, or alternatively W, X, and then Y. Now that could look to actually push us up towards this 1-to-1 if we did come back down to the 0.618 area here. Now if we didn't actually move up, and yeah, so the 1-to-1 would be towards this $1.95 if we don't push up for this additional fifth wave here. If we do, however, what we'd have to be just aware of is that this could then in fact either become A or wave 1. If we do get a 5-wave move up here in an A or wave 1, this key zone here is going to be this $1.56. As long as we remain above this level, we could potentially look for continuation to the upside, where we have a bigger 5-wave potential here if we do actually move up towards this $2.28. However, because of the fact we're looking for that possibility of a fourth, what we need to be careful of is if we get something like this as ABC up towards this $2, big psychological level here, also takes out some of these key zones that we've been looking at, and then looks to potentially break to the downside. Obviously, as long as we maintain that B wave low here, we would have to be careful that this isn't forming another 1-2, 1-2, 1-2, and then we have a bigger impulsive move to the upside. However, what I'm looking for here is basically to see whether we get this additional fifth wave. If we fail to develop this, all we have then technically is a 3-wave move to the upside, and then we'd be looking for 3-wave moves potentially to the downside, and then another move to the upside if the fourth wave is going to continue. Alternatively, we could just see this as ABC, and then we actually break down directly. So gonna have to keep an eye on this. We want to see this $1.67 hold, then from there whether we get this fifth. If we get this fifth, need to hold this zone of this $1.56 and then see whether we get an additional third, fourth, and a fifth wave here, which could look to push us up towards this $2.48 to this $2.36. If we do see a move up in this manner, what we'd be then looking for is the potential that this could become an A wave, this could become a B wave and a C wave, or alternatively, this could be wave 1 of a bigger impulsive structure to the upside. So if we do see a 5-wave move up here, it would indicate that we're going to see a secondary 5-wave move, and then we'd have to track that one as we go. Looking at the CPR on the weekly, we can see that we are sitting above these central lines here, which is between this zone here of this $1.67 to this $1.66. Now, if we do remain above these, we do have the potential to move up and test this S1 line of this $1.83, the S2 of this $1.99, and even this S3 towards this $2.16. The spread on these is very tight. This indicates typically that we're going to see volatility. So if we do see this, move up or down, we could potentially see some volatility. If we, however, start to lose this zone and actually reject off of these lines, then it becomes more likely we're going to see them move down towards this $1.51, this $1.34, or alternatively this $1.18. So this is a potential zone we could actually look for continuation to the downside, which could tie into that idea of actually breaking down one more time here, looking for this fifth wave if we fail to maintain these central CPR lines. Now, the other way that we can look at this is if we change this over to the monthly pivots and have a look at what is going on there. We can see that within the monthly pivots, we've actually come down to this R2 line already. Now, it is always possible that we could see a move up towards this this R1 line, which is sitting towards this $2.17, or even failing to move up there where we just form a corrective move. And then we could still see potential to even drop down as low as this R3 line, which would be down here towards this 77-cent range. Obviously, it is the 30th today, so we've only got another day, another 2 days of having these CPRs lines being viable. But this is something I'm just keeping an eye on. If we do just get a 3-wave move, I would be interested to see if we do get a move up towards this $2.17, though it is, there's nothing really implying that we're going to be seeing a move up into these levels. But if we did move up here, this could be a potential rejection area. Looking at the Ichimoku on the shorter term time frames here, on the 4-hourly, we have actually just interacted with this and we are moving into this Ichimoku cloud. It is possible we could see a drop down towards this $1.68 before looking for that possibility of continuation to the upside here. This would tie in with that idea of a fourth and a fifth wave here, looking to actually come back into some of these higher levels here and looking to actually retest the top of this cloud. If we now switch over here to the 8-hourly, we can see that the 8-hourly cloud is a little bit further away. We are actually above this baseline currently towards the zone of this $1.71. If we maintain this, we could actually still see that potential of pushing up for that additional leg here. Now, we can see the bottom of the cloud directly above us is sitting towards this zone of this $2. Now, this would be, once again, that important psychological level. But before that, we do have the potential of swing failing these two highs here, as well as these naked points of control that are still sitting within this block. Looking at the daily, we can see that this Ichimoku cloud is a lot higher. So if we did actually see a move up here in a bigger way where this becomes A, B, and a C, this could actually tie in with that idea of coming back into this cloud at a later point. And a particularly interesting area I'd be looking for would be this $2.52. Failing that, we do also have this baseline, which is currently sitting towards this 271, which would tie in with actually coming into this high that we have here. So this could be quite an interesting zone to keep an eye on as time goes on. Looking at the EMA ribbons, we can see here that we have the first line sitting towards this $1.84. So a move up into this would be an interesting zone to see how we react. If we do start to break up through these levels, what we could see is an interaction with one of these higher lines here. Once again, this $2 will be an interesting level, as this would be coming into the third line here. If we do actually move up in such a way, this could actually tie in with that fourth wave idea, and then looking for that continuation to the downside. So keep an eye on these. They are quite widely spread at the moment. This means that we have quite a big zone of potential rejection that we could have here, anywhere really from this $1.83 all the way up here towards this $2.40 area. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description, you'll find a link to Discord. Come check it out. It's free to join. Everyone, have a great day. See you in the next one. Take care.